Hi everyone and welcome back. This is Steven. Today we're going to continue our discussion around technical indicators, and we're going to be talking about the Moving Average Convergence Divergence Indicator, or the MACD. So let's jump right into the MACD. If you remember a couple of lessons ago, we talked about exponential moving averages. The MACD is a combination of a couple of different exponential moving averages. So it's the 12-day EMA subtracted from a 26-day EMA, and that gives us one line, which is our slow line. Our fast line is a 9-day EMA, and that's our signal line. And then finally, we'll have a zero line that these two lines will cross above and below as the stock trades. There are a couple of different things that we're looking at in the MACD to give us a signal, a buy or sell signal. The first one is a cross of the 9-day above or below the 12 subtracted from the 26-day EMA. So when the 9-day signal moves above the slow line, that's a bullish sign. When the 9-day signal moves below the slow line, that's a bearish sign. We also have the zero line, as I talked about a minute ago. When both lines are above the zero line, that means that the fast signal 9-day line is above the slower line, and that's bullish. That means the stock is in an uptrend because the closer in prices are moving up. When the 9-day signal and the slow line cross below the zero line, that's a bearish signal as the close-in prices are moving down. Remember, the EMA is a momentum indicator, and it's also based on historical prices. The final thing we're going to talk about, and that we'll look at in the charts in just a minute, is a divergence. When a stock moves higher, but the MACD moves lower, that's a divergence. The same thing happens when a stock moves lower, but the MACD is moving higher. What this indicates is that the price in the direction that it's moving is starting to slow and could possibly change trend direction. So you have a divergence between the stock price and the direction of the MACD, which again is indicating a possible trend change. Okay, let's look at the MACD on a couple of charts and see how we trade with it. One note on the MACD is that it works in any time frame. So we can use it on a daily chart to trade daily moves. We can trade it hourly or even on a minute chart. So unlike some of our other indicators, which work better either long-term or short-term, the MACD works in any time frame. Let's look at the charts. Let's take a look at the chart of Intel on a daily basis. We can find our MACD under indicators at the top. Click that. Simply type in MACD. That applies our MACD indicator. Close this box. So the MACD is displayed on the bottom of the screen. Our fast line here is our blue line. So that's our signal line. This is the zero line for the MACD. And you can see as the MACD is above the zero line, the stock is in a bullish pattern here. It goes back down and touches the zero line. Our fast signal line drops below, but then the stock goes back into a bullish pattern here. This cross on February 22nd is a buy signal. We see the stock moves up. We get a sell signal on the 19th. Then the stock trends sideways to slightly up. And we get a MACD that stays positive but isn't moving higher. And here I want to point out the high in March. And you see the MACD at the level it's at. And then as we move forward to May and June, you see that the stock price has moved higher than it was in March, but the MACD has actually moved lower. And that's a divergence. This would be a warning sign that the trend is about to shift. And we get a sell signal on June 7th, and then the stock moves down again. And that's the MACD on a daily basis. Now let's take a look at a shorter time frame chart. Let's take a look at an hourly chart of Microsoft. Let's begin here on June 26th. We see a cross to the upside, a cross to the downside. And what you'll notice is that there are a lot of crosses in Microsoft with the MACD at various levels. And these crosses can get us in and out of the market without much gain and cost us in transaction fees. So one way to trade the MACD is to only use crosses in extreme levels or around the zero line. So if we do that here with Microsoft, an extreme level would be around -70 and +70. So if we only take those crosses, we have an oversold condition in the stock here, a positive cross, the stock moves up. We have an overbought condition, so we would have exited that trade here. Stock comes back to the zero line, and we have another buy signal here. We would enter this trade and exit on this cross in an extreme overbought condition. The next cross of the MACD at an extreme would have been here in July. We would stay long till here, and we see a cross here, but it's not in the extreme condition, but it's getting toward overbought at this point. So we might be wary, and we'd also want to use our candlestick patterns to inform our trading. But you can see on the hourly chart that the MACD may give you too many buy-sell signals. So again, you can use the extreme overbought and oversold conditions and the zero line to inform your trading. So that's the moving average convergence divergence indicator, or the MACD. And again, it's one of my favorite indicators, especially when using it at the extreme levels that we talked about on that last chart in combination with candlestick patterns. Thank you for watching this video on the MACD. And our next video will be talking about the relative strength index, and I look forward to seeing you there.